This channel is for educational purposes only. Make sure you do your own due diligence before making any investments. And there is inherent risk in trading, so it's speculative. Just make sure you keep that in mind. Hi, this is Joe. We're going to talk about the market, look at the S&P and the QQQ. I want to give an update on the market conditions. And, we've got a little bit of a disparity between some of the conditions. Some look very good and others are starting to get into a little bit of a scary position. So let's go ahead and talk about that right now. I'm going to go into the trend and momentum. The momentum did improve a little bit this week. The volatility continues to look pretty good. If we look at the this line here, this reddish line, which has been declining and now below the blue line, which is the moving average. So that's an average true range. It just gives an idea of it's a measure of volatility. And when I'm looking at this, I'm really looking at the direction of the line as opposed to the level of the line. These periods where it's declining, it tends to be, and below the moving average, which is declining, tends to be lower risk environments, tends to be stronger periods. And we're in one of those right now. How long will that last? I don't know, but we're going to need to see, a little bit more volatility than what we've seen recently. It's just continuing to go higher. We had one down day really out of the last 7 or 8. So that's one factor. RSI 5 on the weekly has worked its way up to 83. And if you notice, we can look at this going across. I mean, We've really had some issues when this thing gets up into the mid 80s. So I think you want to be aware of that. And the fact that the sentiment number has now worked its way up to 47. That means that there's 47% more bulls than bears right now. It's another sort of sign to be a little bit more cautious. So these two are I would almost be subtracting from the market conditions. While these two conditions up here, the trend and the momentum are pluses, and the volatility is a plus. So this is a minus, this is a minus. So when you put all that together, I think you have to follow the trend of the market. And then we know the backdrop isn't so great. We're getting overbought. I mentioned last week the percentage stocks above the 50-week is getting up there, and the sentiment is getting up there. And as I've said numerous times, those aren't timing tools for me. They're secondary indicators that I use to give an idea of how much risk there is right now. And yeah, the risk levels are elevated, but that wouldn't necessarily keep me from buying. I just would have to make sure I'm getting really good entry when I do it. And secondly, I'd probably do smaller positions if I'm putting money to work right now with the S&P kind of stretched away from the 18-week and also the 18-day. I personally would wait for some kind of a pullback in the short term. But if I felt like I had to put some money to work, I would do it on a lesser scale. If I'm going to do a buy in a specific stock that I think looks great, probably do a 50% position of what my normal size would be. Let's go ahead and get into the trend conditions. And, so we're back into the same position where 18 is rising above the 40 on the monthly. Same thing on the daily. On the weekly chart. Same thing on the daily. And the hourly has been in this condition for quite some time. That's a pretty long time for the hourly to have 18 above the 40, both lines rising for this long. It's a little unusual. It's somewhat of an extended run. But for now, I don't see any signs of momentum loss or anything. The MACD didn't confirm here on the hourly. And now it's trying to turn up from here. But if you notice, the ADX has been above 25 this entire time. Hasn't even come close to 25. Green DI has stayed above 25 as well. So we're in a really kind of a powerful phase on the hourly chart. The one real change this week is that the ADX on the daily chart not only got up to 25, but it blew through it. And green DI is showing a lot of strength. As I mentioned last week, we started to see a little bit change in character on the green DI, and now we're getting a little bit of follow through. What's bothering me is that we're getting a little bit too far away from this moving average. I put a little line up here to show this is a target I have. It's a projected target. It's up around 4,300, 4,280 to 4,300. Just something to keep in mind. If we were to keep running from here all the way up to that line, that would probably be a pretty good target for the short, probably like a shorter term move. My longer term target is much higher. But right now, as long as the weekly chart can kind of maintain this, so you see this overbought line I just drew in. It's kind of like an upper channel line, and that connects to this peak here. And we've got a little bit more room before we hit that, and it actually would probably meet up with it right at my projected target. And so somewhere up in the 4,250 to 4,300 area would probably be the next short-term area that I'd be watching for some resistance to come in or some profit taking potentially. Now, we might pull back in between here and there. And if we do, I would say that we still have a pretty good chance of going up and hitting that next target level. Let's go ahead and look at the QQQ. I think overall conditions are pretty good. We had nice follow through on the weekly. This bar that was we were holding the 18-week, and then we had a pretty good green bar, and then we followed through last week, and now this week we're getting a little bit more follow through. We're back up into the old high, and I was sort of expecting a little bit more consolidation, but overall the pattern looks okay. The strength on the so if we notice, this is sort of interesting because the spider's strength is really strong on the daily ADX. This is not all that great, and really even on the hourly, we're not seeing the same kind of strength. So does that prevent this from going up? I don't think so. I think it just means maybe we're going to get a little bit of a dip first or some kind of a consolidation first before it goes up. The target I have for this is around 363, 364. That's the next interim target. Just looking at this, overall, the patterns are still in pretty good shape. I'm not seeing a significant amount of damage being done. As I've mentioned in the past, we want to look for periods where so if I go and look at the S&P on one chart, this is a daily chart, and I've got the monthly line, the weekly line, and the daily line. We're kind of looking for those periods where so this is the weekly is already stretched from the monthly, and we haven't really gotten the daily stretched from the weekly yet. But if this were to keep pushing higher, we're going to get into a situation where the 18 is going to get away from this line, which is already pretty far from the monthly line. If we get that and we have that, and then price gets away from the daily 18, then we're stretched away from here to here, we're stretched away from here to here, and we're stretched away from here to here. That would be incredibly dangerous. The other way this could play out is that we lose momentum. We haven't done that yet, but we could come up, come down, rally up again, and have momentum come up, come down, and make a lower peak, and show some sign of momentum loss that causes some kind of a reversal. I really wouldn't spend a whole lot of time looking for that at this point. I think what the market wants to do, it looks like it wants to blow off a little bit and probably get stretched away. I think that's the higher probability. So I would be watching for those target levels that I mentioned before. And, we're just going to have to see, how this wants to if this is going to keep carrying. But the momentum and the price conditions overall are pretty good, especially on the S&P right now. All right, so any questions or comments, please post them, and we'll talk to you next time.